We're so excited to bring you our new info series from Rubino and Company. Our hope is to provide you updated, timely information
to help you and your organization keep up with new laws, codes, rules, and regulations. We hope you can join us for each episode and looking forward to talking to you soon. Hi, I'm Chris Menina.
I'm Karis Call.
And we're here with Rubino and Company. We specialize in working with nonprofit organizations, and we're here to talk about nonprofit financial reporting today.
So here we go. We'll start off with a couple of questions on your end.
Yeah. So, there's a new financial accounting standards update that we're going to talk about, ASU 2016-14. And I was just going to ask, what are some of the major changes that are going on with this?
So primarily we're looking at the net asset classifications. Previously there were 3 classifications and now there are only 2. Looking at the liquidity disclosure, that's a new note to the financial statements. The functional expense schedule is now required. Investment return reporting has been, there's not as much reporting in relation to that.
Sure. So
a lot of changes, but ones that I think that are good for the nonprofit industry as a whole.
And so when is this effective? Because we got to know when we got to make this change.
Exactly. So for nonprofits that are calendar year ends, it's going to be effective December 31st, 2018. So a lot of you have already implemented those changes.
And you're probably already seeing it in your financial statements.
Exactly. But for those whose year ends are potentially June 30 or September 30, any year ends beside that calendar year end, you'll implement in 2019.
Okay. What was the purpose of this? I mean, what's the whole point? What are we trying to achieve with this?
So the purpose is really to say, let's have transparency among nonprofit organizations. There are some who weren't implementing the functional expense schedule, and then there were those that were reporting on it. So to say, hey, all nonprofits, let's have a standard by which we're all going to report.
Right. Yeah, it used to be only voluntary health and welfare plans had to put the statement of functional expense.
Exactly.
And now everybody's got to do it. So we got that consistency between organizations. So everybody's there.
Yes, absolutely. The liquidity change, as far as the note disclosure, is a big change for the year, I would say. I think you've implemented it, as have I, in our organizations that we've worked with that are calendar year ends. But I think it provides a lot of transparency.
Sure.
Would you agree?
Yeah, absolutely. So you want to dig into this a little bit?
Yeah, absolutely.
All right. Why don't we start talking about some of the net asset categories and how that's changed, what's different, maybe what it looks like in the financial statements.
Right. So as everyone is aware, you used to have the unrestricted, temporarily restricted, and permanently restricted. Now you just have with restriction and without restriction. Now that can be broken down further, and you can say with restriction, and classify it as those net assets that you would have previously called temporarily restricted and permanently restricted. You can break out within the with restriction category.
Sure. So you're only going to see those 2 categories, and it's sufficient just to present those 2. But if you want to break it down a little further, you can?
Absolutely, yes. Okay. You can break that down on the statement of financial position, and you can also break down further on the statement of activities.
Okay.
We've seen both in the organizations that we've worked with.
So how does it actually look when you start to present this in the financial statements? I mean, what does the statement of function or statement of financial position and statement of activities look like versus what it may have looked like before?
So the change is very cosmetic. It's just going to show where you would say unrestricted previously, it's now going to say without restriction.
Right.
And where you said temporarily restricted previously, it will say with restriction.
Sure.
The complication would arise if you have permanently restricted net assets.
Right. Okay.
If organizations want, as I said, if organizations want to provide further and say these are our net assets restricted in perpetuity, and these are our net assets restricted for donor purposes.
Right.
You can break that out within the statement of financial.
So you still have the ability to give that level of disclosure.
Exactly.
Okay, great.
But you have some transparency, you have some ability to break it out as you will. So.
Okay. Is there any substantive changes with the notes as it relates to this, or just sort of just the language disclosing what's going on with it?
So within the notes to the financial statements, you do want to identify what the net assets with restriction and without restriction entail.
Okay.
So you do want to break that out in the notes to the financial statements.
What about underwater funds. I mean, that's one thing that's sort of a hot button issue with certain organizations. But
Right.
how's that look
Right.
now?
So previously, the underwater funds you had to break out, they were all included without restriction.
And I'm sorry, I should cut you off. I should define what underwater funds are. Maybe
There
we
you
can
go.
jump in.
Okay,
Do you want to handle that or should I?
go ahead.
All right. So underwater funds are basically if you get a contribution that is to be maintained in perpetuity and you say invest those assets to maintain the corpus and spend the any investment earnings thereupon. If for some reason the value declines below the original corpus, you have what's known as an underwater fund. So your current value is less than the original contribution. And there's certain ways you got to handle that. Maybe I can jump and kick it back to you then to sort of talk about how that's to be treated now.
So previously, you're right, you're going to say it was included without restriction,
Right.
and now you're going to apply it with restriction, in the
Okay.
with restriction category, and include it as in the total value of those net assets with restriction.
And is there anything in the notes we have to disclose that sort of changes or additional disclosure about that?
Right, so you do want to disclose the total underwater funds for the year, the total value of the underwater funds, and provide some analysis within the notes.
Okay. Okay.
So you want to move on to liquidity
Yeah, let's
disclosures?
talk about liquidity. That's always
All right.
fun.
Yeah,
All
I mean,
right.
it's a great topic. As far as the changes are concerned, you've got the qualitative and quantitative.
Right.
So the quantitative is pretty simple, right? Because it's just your quick assets
Sure.
that are going to be within that disclosure, and it's just you take all of your quick assets minus your net assets with restriction, those net assets that you can't use for the foreseeable future, and then that gets you to your assets available for use.
Okay, so this is basically what my organization can use, say, within the next 12 months
Exactly.
to fund immediate cash needs.
Exactly.
Is that what I'm understanding?
Yeah,
Okay.
absolutely. And that's the purpose of it. And you're going to go further in the disclosure and talk about qualitatively
Right.
what the organization is doing to
Sure.
provide for operational needs
Okay.
in the foreseeable future.
Okay.
That has some variability. You've seen that as well in organizations you've
Yeah.
worked with. It's not very specific as to what has to be included.
Sure. There's a
I-
little bit of professional judgment allowed there.
Exactly. So we're kind of moving away from this rules-based approach to a
More principles-based?
Yeah, exactly. So it's an interesting change. I don't know if you feel that this is it's a good change for organizations as a whole.
If I'm honest, I think it's a great change. It gives you a lot of ability to sort of tell your story as an organization. Also give a little bit more visibility to the readers of the financial statements as to sort of what our ability is and what our financial position is. I mean, there is a statement of financial position, but this really gets to the core of what kind of cash reserves, what kind of financial assets we have on hand. I like the fact that qualitative disclosures really gives you an ability to create a narrative, explain sort of what your organization does and your cash flow policies and procedures.
Yeah, I've heard some of the accounts that I work with have said it's almost like an MD&A disclosure for nonprofit organizations.
Exactly.
It provides a little bit of an opportunity to really tell the nonprofit story.
Right.
And that's a really unique change, I think.
Right. Now, what about operating reserves? Is that something that comes into this as we delve into the qualitative disclosure? I mean, is that a place where you want
Right.
to start talking about operating reserves?
Right. I think it is not required under the standard that you have an operating reserve policy.
Right.
However, it's a good policy to consider for your organization. Talking with your board about, do we need a reserve policy? And if you do have a reserve policy in place, you do need to disclose that within the financial statements.
So, hey, the other thing that's significant about this that I think is important is you get an opportunity in this narrative to talk about your operating reserve policy. That's how you're going to use your net assets. What are you going to do as an organization? What do you want to be focusing on? How you're going to spend whatever funds available you have. If you've built up a significant balance of without donor restriction, what is that going to be used for, and how do you think about using that as an organization? So I think that creates a lot of value to the reader to understand a little bit more of what the mindset of the management as well as the board's thinking. just to get a little bit more clarity in what's going on.
Absolutely,
Yeah.
I agree.
All right. So what else do you think about the liquidity disclosure? You said that quantitatively it shows basically what's going on within the next 12 months from a financial
Right.
needs standpoint.
Mm-hmm.
What does that really tell you as a reader? I mean, does that tell you sort of their ability to function as an organization financially, meet their cash needs? What else do you see? What do you get from that? What kind of value as a reader?
I would say you're being able to identify what is available in the
Right,
next
right.
year, and as a board member, you're able to point to that and say, this is how much we can spend within the next year. This is how much we have available for use. If you have plans going forward that you need to, that there's a new program you want to take
Sure.
on, you have the ability to say, hey, this is what we have.
Sure.
In a no disclosure that really says it wasn't available in the previous financial statement model.
And it's fun for us as accountants because we get that quantitative data where we can really see the numbers. So
Right,
I like that.
exactly.
You can really pin it down to a more specific number and understanding rather than just the
Yes.
qualitative factors that say,
Yes.
this is what we're thinking and how
Yes.
we're feeling.
It's
as
good
an
for
organization.
the pencil pushers
Yeah.
among us, which all of us are.
Yeah,
and then it's
absolutely.
also good for board members who want to see a little bit further
Sure.
in regards to that qualitative
Sure.
disclosure.
All right, great. So what else is changing? I heard we all got to include a statement of functional expense
Statement of
now.
functional expenses. So previously, there's some organizations that report it as a other schedule. Some include it as a required schedule. So in order to kind of make this uniform across all nonprofit organizations, everyone is required to present that information. Now, that being said, you're not required to show it as a statement. It can be a part of the note disclosures.
Sure.
As long as you disclose the information.
But it's no longer going to be presented as supplemental information.
That's correct.
It's
yes.
always going to be a base part of the financial statement.
That is correct.
Great.
It will either be in the notes or it will be as a statement.
And so you can show it as a statement or also within the statement of activities broken out. Is that possible?
Yes, that is a
Okay.
possibility. You can do either.
Yeah.
A lot of the organizations we've worked with have done it as a required, as a supplemental statement.
Sure.
Or, I'm sorry.
It
as a
can get
required-
cluttered on that statement of activities if you add too much content.
That's true, and that's something we can go over.
Yeah.
There's a lot of organizations that add a lot of categories, and some organizations are not familiar with the statement of functional expenses currently. So, if you want to put every expense category in there, it can look a little bit too cluttered.
Yeah.
So, consideration should be given to what are your operating activities and what expenses are
Yeah.
really driving your
Right.
activities for the year.
So you want enough information to give visibility and transparency, but you don't want to overdo it because you don't want to just
Exactly.
create so much that it's too much to get through and understand and really get.
Exactly. It's important to really understand what is necessary for your organization
Sure.
and what's too much.
So for those of you who are new to presenting a statement of functional expense, what exactly does this statement do for you? I mean, what does it show?
So it shows your major program activities
Mhm.
and your general and administrative, and then any fundraising expenses that you have.
Broken out by natural category, right?
Broken out by
Yeah.
natural category.
Right. Okay,
Right.
great.
And in your perspective, how do you use that as far as when you're discussing with the board, how do you kind of use that in your discussion?
Well, I think it gives a lot more clarity as to what's going on within this program. Where's the money being spent?
Mm-hmm.
You know, is it all being spent by salaries? Is it outsourced to subcontractors? Are you using it, passing it through to other agencies or organizations? I mean, it gives you a lot more clarity as to where the funds are going by program.
Absolutely.
Traditionally, on a statement of activities, you might see the total for each program, but you weren't necessarily seeing that breakout to say, hey, most of this is really labor.
Absolutely.
You know, you can also see what the admin breakout is, see sort of how those dollars are flowing. And I think that provides a lot more visibility. Also, you know, I think it gives you a lot of talking points to talk about the 990 as well, because, you know, now this is going to sync up to the 990 with a lot
Exactly.
more consistency. So you got a lot of ability to sort of see how that dovetails into the 990. Yeah.
So
do you
we
think?
we should mention, as far as implementation is concerned, do you have to retrospectively go back and present a statement of functional expenses for previous periods? And the answer is no.
Right.
So only for the current year do you have to present a statement of functional expenses.
Right.
which is good.
Yeah.
You don't have to go back and say, let me figure out last year. It's not a retrospective change for the statement.
Sure. And in certain situations, there is an ability to present a single year financial statements if it creates comparability issues that doesn't provide value to the reader. So there is some level of professional judgment as to how you want to present your financial statements.
Absolutely.
So yeah, anything else that you can see with the statement of functional expense?
I think we've talked a lot.
Beaten that one up,
we've beaten that one up.
All right. So what else is going on? What about the statement of cash flow? I hear there's some changes there.
Right. So previously, if you showed the direct method, you had to provide an indirect method reconciliation. And now that's no longer required. So the thought is that a lot of organizations will now implement the direct method because there's less administrative burden in providing this indirect method reconciliation that was previously required.
Yeah. And to be honest, it's more non-financial personnel that tend to seem like they understand the direct method quite a bit better.
Yes.
It's only us accountants who really like the indirect method.
I agree. I would say, in my opinion, it's harder for us to put together the direct method schedule.
Sure.
However, it is more reader friendly because you can see the cash coming in and cash going out.
Yeah.
And as a reader, that's really all you seem to care about when it comes to the cash flow
like where's my
statement.
cash coming from? Where's my cash going?
Right.
And what's that look like?
Exactly. And especially if you have a year where you had a considerable amount of receivables in the prior year and now you've got a lot of cash coming in, and reporting to the board, you're saying, hey, this is the amount of cash we have available.
Right.
And that's really hard to see in the accrual world that we live in. You really want to show the cash that's coming in and the cash going out, and the direct method really provides that.
Right. Yeah, so the indirect method is more, like you said, an accrual concept, changes in my property and equipment, depreciation and additions, and changes in my receivables and payables and all that, rather than just getting to the heart of cash came in from here, cash went out from there.
Exactly.
Yeah. Okay.
So what other changes are we looking at? We have investment return.
Yeah. What's different there? What's going on with investments? Because that's a big thing for a nonprofit organization.
Exactly. So previously we had to break out investment income by unrealized, realized, your income, your dividends, your interest. Sure. Now you no longer have to present that in the notes.
Sure.
You still can, and I think there's a lot of organizations that provide that there's some value in that.
Right.
But it's no longer a requirement to disclose the breakdown of that.
And like you said, you're still allowed to. So if you think that as an organization that provides more visibility, more transparency, you're certainly welcome to do that.
Right.
But again, not required. So if it makes it more simple, more reader friendly to just present it as a total, then you're able to do that in that situation.
Right. And it's also important to mention as well for the investment return, if you do have a significant portion of your time spent reconciling investments, you can also add that to the investment expenses, which is very valuable to a lot of organizations because if you do have extensive investments, you're spending a lot of time internally reconciling those.
Yeah, absolutely.
So including that in the total investment return value can be very, very valuable.
So then you're just charging a portion of your maybe staff accountant's time to admin expenses for reconcile. Yeah, there you go. Okay.
Yeah.
What about on the statement of activities? There's a little change there into how investments are presented. You can only present it net. Whereas before you could present it under multiple sort of presentation methodologies.
Yes. So now the investment fees have to be netted with the investment return. So your income and your unrealized, realized are going to be recorded, and then your fees are going to be subtracted from that number. So investment return net, and you are correct. Previously, you could report the income and the fees separately.
Right, and so that gives us a little bit more consistency from organization to organization. So you don't have to go in and figure out, hey, are you netting your fees or are you just presenting this gross? Gives it a little bit more consistency so we can understand organization to organization
Absolutely.
just what's going on without trying to dig into the details too much.
Absolutely.
Yeah, okay. What else? What else is significant? Like, as it relates to operating measures, we have to disclose a little bit more just to understand exactly what's an operating measure?
Right, so in the notes to the financial statements, you want to go over your measure of operations, so disclosing what is operating, what's non-operating. If you only have operating activities, you have no non-operating activities, just disclosing what actually is included there.
Sure, okay, great.
So are there any unique situations that you've seen in organizations that you've audited that kind of, you've had to kind of go over the unique aspects of the standard?
Well, I mean, I think for the most part, what I see organization to organization, the most significant thing that wasn't there before is the liquidity disclosure.
Exactly, yeah.
That's something that you need to work with organizations to make sure they fully understand what's required there and what's required of them as an organization to really have that policy in place so that they're, it's not just words on a page, it's how you're running your organization. And I think that's important. And I think
You're right.
it's a really good value for organizations going forward.
And considering implementing that operating reserve policy going forward, you don't have to do it this year in the first year of implementation, but having it on the back burner when you speak to your board and saying this is a consideration that we might make in the future.
Right. And I think that operating reserve policy really does provide a lot of value, and it's certainly a talking point that everybody should be having at sort of the management and board level.
Absolutely.
What about you? Have you seen anything sort of funny, unusual as it relates to this transition? Any unique situations?
I would say, as you said, the liquidity reserve is something that's kind of scary for those implementing, but you're right, you have to work with your clients and understand what that should look like. The statement of functional expenses, I think, is a little bit more challenging for some C6 organizations who didn't previously have to disclose that information on the 990s, so they're having to put that together, and that's a little bit of a complication in some situations.
I mean, making sure you have everything allocated properly by program and by natural expense category, that presentation can be a little bit difficult for organizations that haven't gone through that before.
Absolutely. Additionally, I would say, as far as the cash flow is concerned, considering using the direct method is something organizations should really think about. It's, in a lot of ways, for board members, it's a lot easier to understand.
I think so.
And as accountants, as auditors, bringing that up to your clients is important.
Sure.
And then for organizations, thinking about that and how it might add value.
Sure. Yeah, I would say that I expect to see more and more direct presentations of the cash flow method.
Yes.
It seems to be intuitive that it will end up going that direction, at least somewhat. It's swung heavily towards the indirect method over the years, but maybe this is an opportunity to swing back a little bit.
Right, absolutely. Thank you all for tuning in today. We went over the net asset category changes, changes to underwater funds, liquidity disclosure.
You know, there is a lot of change with this, so we expect there to be some questions and some struggles as you're implementing this. Happy to talk with you further if we can provide any value on this front. Thanks so much for your time today.
Thanks so much.